Do you know when to take the profits and run? I'm going to show you exactly how to get out of those big winners and the indexes before the crash. Let's go. Let's take a look at the spiders. What the heck are the spiders doing? What story is the spiders telling us? It's telling us a couple of different stories from what I can see. Today on the daily chart, we're getting a spinning top doji, but we're making a new high. So we do not have a bearish reversal signal yet. However, are there other clues on the daily chart that are telling us that this could be marking out the territory where we could be running into a potential top? And if we get a top, how far are we expected to pull back? The other thing that is of interest to me is, of course, what's going on down here with the momentum indicators. And you can see momentum. I have a negative divergence in my momentum, even though I'm making an all fresh new high on the S&P. Where can I expect the S&P to pull back to? Where does it become of interest to me? Well, again, I go back and I say, what story has it told us in the past? And what story has told us in the past is it really likes the 20-day moving average. And that's something we can take into consideration, because if it likes the 20-day moving average on the way up there and it respects it, you can tell it respects it because the 20-day moving average says, see, it respects me because it stops right where I'm at. And then it bounces from there. And if it continues to do that, because the characteristic and personality of an entity, and this goes for stocks also, is that it will continue to repeat over and over again. And then once it stops repeating that characteristic, that's telling you that, the structure of this entity is changing. So what I'd be looking for is a pullback back into the moving averages. Again, as we've talked many times before, and it's the moving averages, not where they are today, but where they're going to be next week, which is going to up there. Note that this could be at the current trajectory. There's an intersection line right here with the past highs. Well, price action could just drop to there, or it could, in fact, drop more. A couple of things of note, though, is oftentimes when an entity such as the S&P here kicks out the top side of a parallel uptrending channel, that is oftentimes a precursor to take a big fall. And we'll see if that, in fact, happens going forward and it drops back down. But right now, the S&P, other than having the negative divergence on the momentum indicator, we don't have a reversal signal, neither on the weekly nor the daily charts. What about the Russell? Poor Russell. Do you guys feel sorry for the Russell? I mean, we should. We should just basically feel sorry for the Russell, because it's been taken to the woodshed so many times, all the way going back to 2022, and it has just really struggled compared to all the other indexes. The other indexes, the S&P, the NASDAQ, have always been doing well. Positive signs on the Russell, as represented by IWM here. We had a gap down. However, that gap just got filled. That's a positive. Check one. It appears as if the momentum is wanting to bounce off the zero line. That's a positive. Same over here on the weekly chart. We're getting an upturn on momentum. That's a positive. The challenge with the price action for both the week and the daily is that it still has this huge, strong level of resistance up there at the 205 level, where until it breaks out of that, guess what? It's not going any higher. That basically is the cap on the Russell. It's probably not going to go any higher. So how should I trade this? The story that the IWM is telling us is different than the story that the spiders are telling us, because guess what? I don't have a clear path or clear picture of which of my moving average is going to provide support. And so in a situation like that, when I don't know, the next best thing to do is, if I can define here is one trend line right here, go up through. And so I can look at that trend line. I can also look at this trend line down here. There's a secondary trend line. Quick question for you guys. Which of those trend lines do you think is stronger? Is it A or B? Which do you think is stronger? Just drop a note in the chat box. Make sure you're give us some real nice thumbs up and saying, "Hey, how great this is." Which is stronger? A. That's my Canadian imitation. You guys are absolutely brilliant. Yes, it is number A. The reason why it's number A is because it's a little bit more shallow, and the trend lines is also running parallel to the 50-day moving average. So that's a great choice on that. So that's what we're looking at for the Russell. Did you get out of Palo Alto Networks before the big plunge this week? If you didn't, then pay attention to our technical trade tip for this week. It'll blow your mind and help you save a lot of money. Why is today's trade tech tip important? It's going to help you elevate your trading strategy to a peak of knowledge. And I say that partly tongue in cheek. Today we scale the Everest rule. And it's a strategy that was utilized by William O'Neill, that it basically says that if a stock has run up over 20 to 30%, approximately, and the rallied over about a 50-day period, make sure you start taking profits off the table. If it's extended like 100, 200%, also start taking some profits on the table and be ready for it to do a reversal. Look for climatic indicators like we just saw on the negative divergence on the momentum indicators. If you're an RSI trader, you also have some climatic readings on that. As the stock approaches its zenith and peaks out, it's going to start looking weak. What do you look for on the charts? One, a rally lasting about 50 days after an exponential rise. In other words, it's gone up almost exponentially. Profits over 20 to 30%. Overextended from its moving averages significantly. And people may ask, how much is significant? Well, you look at it. Like right now on ARM. ARM's a long way extended from its 50-day moving average. Moving averages have a pull to pull things back to them. And then I look for divergence of momentum indicators. So what do? One, have a plan, take partial profits on strength, and that's it. Keep watching as we reveal more about these picks. And if you found that this beneficial, just let me know. Oh, what about Palo Alto Networks? That was the other piece of the pie there, because Palo Alto Networks just fell off the cliff. You can't forget the NASDAQ. And let's do something different. I'm going to take a look at the NASDAQ, and then we'll bounce our way back down. So NASDAQ, as you can see, we've got this 100% extension up here that it's come close to, but has fallen away from. Now, that is an Fibonacci extension from a past move up. So that would be a symmetric move to what happened back. Let me take this back a little bit. That is a symmetric move from this low here to that high, going back to this primary low here. That is the symmetric move up to the upside. Came really darn close, but now it's pulling back. So on the NASDAQ, do I have a reversal signal? No, I do not. Do I have negative divergence? Yes, I do. Also, something that kind of is forewarning, if you will, is the market forecast momentum on the daily chart also tipping over. However, things on the weekly chart still look strong. Still think that the NASDAQ will outperform the other indexes going forward. The techs are doing exceptionally well. Another question I have for you guys, just drop a note. Yes or no? Are we getting a repeat of 1999? Yes or no? Now, if you weren't alive in 1999, I can understand. Just put a question mark. Are we getting a repeat of 1999? In other words, another tech bubble? Because that was the dot-com bubble. This is our past performance. The green lines are the past performance of the AutoPilot trading going back to 2012. The blue line is the comparison of what the S&P did. Here's where we are this week. I am on schedule. Last week, I was ahead of schedule. And here's where I stand today. I dropped about 2% off of where I stood last Friday. And I'm really pleased with that because I went from holding 7 stocks to now I hold 1. That's all it's in my portfolio, and I'm waiting patiently to be able to jump on a trade to the upside. But again, I'm not gonna make a move until I get the signals that I'm looking for. If you ever find yourself wishing for a trading compass to navigate through the storms and doldrums of the market's autopilot trading system is a beacon. Here's what Nate had to say about the autopilot trading system and what he's been able to do in 2023 and hopefully take that forward into 2024. And I think he is. I'll put a link down in the description of the video. It'll show you exactly how to get linked on. Most traders complicate the process and they want to know more than they need to know to be successful. If today's odyssey has sparked a flame within you, let it grow and discover more with our swing trading tips. There'll be a video that'll pop up here shortly. Remember, the path to trading success is not paved with complexity, but with the simplicity of mastery. And just a reminder, all materials presented are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or a promise of future performance.